Yes, welcome. Welcome for a question on company accounts. Company accounts, how do we maintain the company financial books? This is a question that was asked in the May 2021. May 2021 exam. It's Financial Accounting, CPA Section 1. Section 1. So May 2021 paper, FA CPA Section 1, and it is question 4. You might just have, you might download for easier following, and we'll go through the question very fast, work it out to help you. This is just a guide on how to answer questions like this should you come across them in an exam paper. So the following trial balance was extracted from the books of account of Almond Limited as at 30th September 2020. Ordinary share capital 10 shillings per value, 20,000, 8% redeemable, 6% debentures, revaluation reserve, retained earnings, inventory, purchases, distribution costs, admin, investment income, all those. You just need to go through them. These are trial balance. And at the end of the day, the trial balance balances with a suspense account of 26,000 shillings. So let's continue. The additional information. The amount in the suspense account was discovered to be as a result of 2 million ordinary shares issued at 13 shillings per share. Okay, we'll come back to that. The annual stock take took place on 6th October 2020. It gave an inventory value of 14,500 during the period from 1st October 2020 to 6th October 2020. The following transactions took place. So we have sales, purchases, sales returns, purchase returns. Almond Limited makes a uniform rate of gross profit of 25% on selling price. That is good. So as at 30th September 2020, no entry had been made in the books for the following unpresented checks. We have stationery 160,000, payment in advance for goods worth 300,000 to be delivered in October 2020. The company received a demand notice for rates of 240,000 for the year ended 30th September 2020. Company's policy in relation to annual depreciation on its non-current assets is as follows. Buildings, plant and machinery and furniture, fittings, on straight line and reducing balance basis, respectively. Then plant and equipment have a residue value of 5 million. As of 30th September, an allowance of 4% of account receivables to be made, as well as a provision for corporation tax of 18.5 million. Then you have this investment portfolio. The investment portfolio was short-term investment 22.5, long-term investment 12,000. The directors proposed to pay a final ordinary dividend of 10%. What is required is a statement of profit or loss for the year ended 30th September 2020 and the statement of financial position as at 30th September 2020. 10 marks, 10 marks, giving us a total of 20 marks. So we'll go through the question very fast and see if we'll be able to give them what they want. And as I said earlier, this is just a guide. This is a guide on how to go about answering questions like this. So it's very important that you take keen interest of every step that we do. So the following trial balance is extracted from the books of Almond Limited as at 30th September 2020. And we are supposed to come up with the books of 30th September 2020. So this is Almond, the company is Almond Limited. So I'll come here. The first step is always to write the heading. So this is Almond Limited. And we're talking about the financial statement. Financial statement for the period or for the year ended. For the period ended 30th September 2020. It's always good that you underline after doing that. So to prepare you to start that question, so we underline it. Sorry. So we underline that. Then for ease of working, it's always good that we have 3 columns, or 2 columns, but 3 is good. So we'll come here and talk about the 3 columns: shillings, shillings, and shillings. And if you are going to restrict the zeros, it's good to indicate that you're going to restrict the zeros, so that instead of talking of millions, you can just talk of thousands. So these are the particulars, and then we'll have the amounts on the other side. Okay, so we go, and for us to get the profit or loss, it's asking for profit and loss for the year ended. So for us to get the profit and loss, of course, they're asking for financial statement. So we have to start with the trading account before we embark on the profit and loss account. So trading account, the normal trading account, we know start with sales. It's basically sales less cost of sales. So, and there's no any other way to go about it. So we'll come here straight to the sales and find out what we have as sales in the information given. Sales is 283,460. Now, there's something here. This is a disclaimer. You might want to start with the additional information, work out all the additional information before you start filling in, before you come back with the final, start preparing the final books of accounts, or you might want just to go through. I prefer going through, but if you go through, make sure that you have all the 9 points in your head, the 8 points in your head, all the additional information. Because you leave out one, it's going to backfire on you. You may have to, you will confuse in your work. You have a lot of confusion, a lot of, So make sure you understand the question before you start. And preferably, it is always good you start with the additional information. Work out the additional information before embarking on the entire question. For me, I will just go with I'll flow with the work the way it goes and see how it goes. Okay, so sales 283,460. Then I now remember that there was something about sales, and I can clearly see it's here. So the annual stock took place, it's given inventory value of 14.5 during the period from 1st October to 6th October 2020. The following transaction took place: sales 1.6. The annual stock take took place on 6th October 2020, gave an inventory value of 14.5. During the period from 1st October 2020 to 6th October 2020, the following transactions took place. Okay, this is during the period 1st October 2020 to 6th October 2020. Yet the question is asking for the year ended 30th September 2020. So this might not be consequential for us now. Sales 1.6, purchases 470, sales returns 200, and purchase returns 80. Almond Limited makes a uniform rate of gross profit of 25% on selling price. Good. So this doesn't affect the sales. So we'll go straight to the sales. Our sales is 283,460. So for the period, I mean, there's no effect. So 283,460, we'll come here and say sales 283,460, 283,460. And of course, sales is affected by most likely sales returns. Do you have sales returns? This is not for the intended period. So let's check if we have sales returns. Do you have sales returns here? No, we don't have sales returns. So we'll pick it at that as 283,460. Then immediately go to cost of sales. So let's cost of sales. And cost of sales starts with the opening stock. So let's look for the opening stock. If we have the opening stock. Opening stock, normally it's in the trial balance. You can see it's here. So 12,400, that's the opening stock. So I'll come here and say opening stock 12,400. So we put it in the inner column. Then we add purchases. So purchases might have some workings. Purchases, carriage inwards, purchase returns, all those are workings that go with purchases. So our purchases is 147,200. Just come write it here. If we have some workings, we'll get to know. If we have some workings, we'll put it in the innermost column. But if we don't have some workings, we just put it underneath the opening stock column. So check if we have purchase returns. Do we have purchase returns? No. Do we have carriage inwards? No, we don't have any even in our additional information. So it means we just carry it the way it is, 147,200, and put it in 147,200. If it had workings, we'll have placed them in the innermost column. Then we go to closing stock. Closing stock. And closing stock is normally captured in the additional information. And I think that is what the examiner was trying to test with all of this stuff here that we have. Now, let's look at what the examiner presents to us, because the closing stock is not direct. It has some working. The annual stock take took place on 6th October 2020 instead of 30th September 2020. It gave an inventory value of 14.5. An inventory value of 14.5. So inventory was 14.5. During the period from 1st October to 6th October, the following transactions took place. Okay, 6th October, this was the inventory, but these transactions took place. So sales was 1.6. Okay, sales 1.6. Purchases was 470. Sales returns was 200. And purchase returns was 80. Almond Limited makes a uniform rate of gross profit of 25% on selling price. Wow. So we are supposed to work out this will help us get the inventory as a 30th. So sales was 1.6 normally, and then we less sales returns. When you less sales returns, you get 1,400. So this is the sales. And then for purchases, we will have purchases is 470, and then plus less purchase returns 80, we have 390. So our sales is 1,400, our purchases is 390. Now we don't have the opening stock. It's the opening stock that you are looking for. It is the opening stock that you are looking for. So this will be 1,600 as our sales. Sorry, 1,400. And then opening stock, which we don't know. Then purchases, which we have. Purchases is 390. Closing stock, we don't know. We don't know. Now, closing stock is 14.5. Good. Closing stock is 14,500. And then the gross profit is 25% on selling price. So selling price is so we'll just work with the 1,600. So 25% of the 1,400, sorry, because of the sales return. So 0.25 times 1,400. This gives us 350. So it means our gross profit here is 350, like that. So if gross profit is 350, and here we have 1,400. Gross profit is 350. So this will mean that we have here 1,400 minus 350. So we have 1050. So here we have 1050. So then, if we have 1050 here, then here we have 14 150, 14,150, and then 390. This is the unknown opening stock, because opening stock for this 1 week, this is the unknown, this is what we are looking for. Then what is this opening stock? So what we are simply saying is that opening stock plus purchases minus closing stock should be equal to 1050. So opening stock is what we don't know, plus purchases 390 minus closing stock 14,500 is equals to 1050. So all of these will go the other side. So opening stock will be equal to 1050 plus 14,500 minus 390. This will give us 1050 plus 14,500 minus 390. That gives us 15,160. 15,160. 15,160. So it means this is the opening stock for this 1 week. For the 1 week, the extra 1 week, because stock take was carried out 1 week later. You can see. It was carried out on 6th October, and the financial period ended on 30th of September. So we are what the opening stock for this 1 extra week is what we are looking for, and we've gotten it as 15,160. It is this opening stock for this 1 extra week that will serve as the closing stock for the whole financial year that we are interested in. So that's how it goes. 1600 minus 200, you get 1400. Purchases, always the workings purchases minus purchase returns, which is 470 minus 80, we get 390. Then sales 1400. Opening stock we don't know. Purchases 390, this one here, and this is 1400, this one here. And then closing stock we've been given in the question, it's 14,500. And then this 1050, we've just worked backwards because the question again has told us that 25%. Gross profit is 25% of selling price. So we've worked out 25% of this to get 350. So if this is 1400, this is 350, then the cost of sales will be 1400 minus 350 to get 1050. So that's how it goes. Now let's go back to the question. And closing stock here we have is 15,160, like that, and put it in bracket because that's opening stock plus closing stock minus opening stock plus purchases minus closing stock. So 12,400 plus 147, 200 minus 15,160. That gives us 144,440. 144,440. 144,440. Like that. Then with less, you get the gross profit. So minus 283,460. We have 139,020. So 139,020. And this becomes our gross profit. So that's how it goes. Our gross profit 139,020. Then after gross profit, we now go to the P&L. And P&L we have add incomes and gains, and then we go to expenses and losses. We less expenses and losses. So let's look for incomes and gains. Do we have any incomes and gains here? Look for incomes and gains. Yeah, we already have, I can see investment income here of 1,500, and investment, this is just number 7. This is what they invested. So investment income, we capture it as it is. Investment income 1,500, like that. Check around if we have any other income. Investment income, where is it? Yeah, investment income is here. Do we have any other income? Investments. Run through it, run through the whole piece of work. Invest, and we are just not looking for incomes alone. Incomes and gains. Gains. Do you have allowable debts? Provision for allowable debts. If we have a decrease in provision, that's a gain. If you have discount received, that's a gain. We don't have all this. commission received, rent received, they are not here. So if we had more than one, we would have listed them in the inner column, and then we brought the total to the outer column. But since we don't have a number of them, we'll just add directly here and get this total 140,520. So that's what our interest is. And then we come here and say expenses and losses. Expenses and losses, like that. So expenses and losses, we identify all the expenses and losses. Just go back to the question, inventory, purchases, distribution costs. We are already there, distribution cost 22,300. So distribution costs, and remember distribution costs. Do we have any workings on distribution costs? So you need to go back, check if we have any workings on distribution costs. As it is given here, we have 22,300. So check around. Do we have anything on distribution costs? Stationery, payment in lieu of distribution costs. Check, check, check. There's nothing on distribution costs. So we'll pick it as it is. And since it's an expense, we'll put it in the inner column. We'll list all the expenses in the inner column. Go back, pick the next expense. So where are we? Distribution cost, administrative expense. You can see that 4,440. Administrative expenses, that 4,440. But there's something about administrative expense. So we'll go back and check what it is. Administrative expenses. So go back, check what administrative expenses. I think there was something here. As of 30, following and presented check. Stationery. Payment in advance for goods worth 300 to be delivered in October. The company received a demand notice of 240 now. Okay, so it looks like the administration expense, there's nothing, so we capture it as it is, 34,440. So 34,440, like that. Then we move to the next. Move to the next. Where are we? Administrative expense, interest on debentures paid. Yeah, that's definitely interest on debenture paid. So interest on debentures paid. Come here. Interests on debentures paid. Interest on debenture paid. How much do we have interest on debenture paid? Now, interest on debenture paid is 300. But when you check interest on debenture paid, please be keen. This is what was paid. If they just say interest on debenture, that's a little bit better. But when they say interest on debenture paid, this is the amount that was paid. But what was the interest on debenture for that particular year? So it's always good to go back and check. So like the debentures, you can see here, it's 6% debenture. And how much is that? 10,000. So 6% of 10,000 is 600 shillings. But how much was paid? Only 300 was paid. So do we write 300 or 600? The truth is that it is the 600 that is the expense, not 300. 300 will now be carried forward to the next financial year. So in such like cases, we write interest on debentures 600 and not 300. So interest on debenture. So we'll remove this word paid and just talk of interest on debenture. It's 600, not 300. 300 is what was paid, but the interest, go back and calculate from there. Unless if the question tells you otherwise. As this one is, we will go with the 6% debenture. Then the next thing is, where are we? We are still picking on this. So interest on debenture, pick that. Interim dividend paid. Now, these ones will not feature in the P&L account. Instead, they will feature in the appropriation account. So we'll leave them. Investment income we've captured. Now, these are depreciations. Let's see what the question has on for us on depreciation. So the amount in suspense, that one doesn't affect P&L. This one we are done with. Now, we have number 3. As at 30th September, no entry had been made in the books for the following and presented checks. So stationery, 160. So it means we paid stationery 160 and it was not recorded. So we simply come here and say stationery. Stationery, how much? 160. Please notice that you had restricted the 0, so the 0 should always remain restricted. Don't get confused. Payment in advance for goods worth 300 to be delivered in October 2020. Payment in advance. So this one will not affect our. This will not affect our P&L. This will just come in later in the balance sheet. The company received a demand notice for rates of 240,000 for the year ended 30th September 2020. The company received a demand notice for rates of 240,000 for the year ended 30th September 2020. It means the rates for that year were 240,000. So you simply come here and have rates 240 like that. So then we proceed. So we've gone to number 4, number 5. The company's policy in relation to the annual depreciation on its non-current assets as follows. So building 4% on straight line basis. So we'll simply come here and do buildings is 4% on straight line basis. So we'll come here and say depreciation. We are now working on depreciation. Under depreciation we are on buildings. So buildings is 4%. So we just work 4% of the cost, because this is straight line basis. If it's straight line basis, it's 4% of the cost. So what is the cost of building? Building is 56 to 50. So you simply say 4% of 56 to 50. That will be the depreciation. So 0.04 times 56 to 50. This gives us 2250. So for buildings, 2250. Just have so you are working somewhere and then you can show them later. Now because we have so many depreciations, let's put them in the innermost column for our work to look good. And then plant and machinery 15% on straight line basis. If it's on straight line basis, just work with the cost, the original cost of that particular item. So plant and machinery 15%. So we come here, plant and machinery, what was the value? 55,000. And it's supposed to depreciate at 15%. So this will be 15%. Now we are working on this. 15% of 55,000. This should be shown in your workings, please. They should be shown in your workings. 0.15 times 55,000. So you need to have a place where you can show them in your workings. Answer is H250. So you come here and say plant and machinery 8250, like that. And then we go to the next one. Then showing is furniture and fittings 10% on reducing balance. Now these are different one, furniture and fittings. So you show it there, and that one is 10% on reducing balance. So on reducing balance, it means 10% of the written down value, the value as at the beginning of that year. So we'll simply take furniture and fittings at the beginning of the year, which is 35,000, and then we less the depreciation, accumulated depreciation. So it will be 35,000. You see this 35,000 here? So it is this 35,000 minus this furniture and fitting. This is the accumulated depreciation, which is 9,600. So 35,000 minus 9,600, that gives you 25,400. So it gives you 25,400. And then the percentage was, the percentage was 10% on reducing. So it will be 10% of this 25,400 400, which will give us 2540. So then we come to furniture and fittings, and we simply show 2540 as our figure, like that. So we are done. You can see how things are flowing and they're not that hard. So then, plant and equipment have a residual value of 5 million. Are we going to use this information? Plant and machinery have a residual value of 15 million or 5 million. Now, looks like we've made a mistake somewhere, and it's good. We need to learn from mistakes. So, plant and equipment have a residual value of 5 million. Please, when you are working on a straight line basis, how do we compute the straight line? You will allow me to delete this. I think we are done with this, so that I can do my workings here to show you how to go about this process. Just go away with this. Okay, so the formula for straight line basis, straight line formula is, when you're calculating straight line depreciation, the formula is cost minus salvage value over the time, or you simply take cost, the percentage depreciation times cost minus salvage value. This is how to calculate the straight line method. Now, we've made a mistake. We were supposed to, what we did was we went straight to 15% of the cost, 15% of the cost of plant and equipment. Remember, the value of plant and equipment was 55,000. So we just worked 15% of 55,000, which is here actually. But what are we supposed to do? Because this plant and equipment will have a salvage value at the end of its useful life. And the salvage value has been estimated at 5,000. It's 5 million, but for the sake of restriction, we talk of 5,000. So if at the end of its useful life, it will still have it, we can still recover 5,000, then it means we are going to work on 15% of 55,000 minus 5,000, which gives us 50,000, like that. So 15% of 50,000 is 7,500. So as we had indicated that the answer is 8250, it simply means that we were wrong. So what we need to do is to factor in that salvage value, and we'll get the answer of 7,500. So it will be 15% of the cost minus the salvage value, which is 5 million. 5 million, but remove the 3 zeros because we are not working with the 3 zeros. We have restricted them. So that's the effect of this statement. Okay, we proceed. So now, as of 30th September, an allowance for discounts, an allowance of 4% of accounts receivable is to be made, as well as a provision of corporation tax. So we are creating a provision for bad debts and also a provision for corporation tax. So provision for bad debts, that one will appear in the P&L account. So let's start from there. As of 30th September 2020, an allowance of 4% of accounts receivable. So what's accounts receivable? That 5,700. So we'll create a provision for bad debts. Provision for bad debts. So come here, provision for bad debts. So provision for bad debts, simply 4% of the accounts receivable. 4% of accounts receivable, and this will give you how much? So 4% of accounts receivable. Accounts receivable is go back to the question. Accounts receivable, you can see accounts receivable. These are debtors. So 0.04 times that 5,700. This gives you 1428. So 1428. We'll have 1428, and 1428 is supposed to come here. Now, the other thing that we're almost forgetting is that this total is very important, that once you work out the whole thing, you need to get the total from 540 and bring the total to the inner column, 12,290, like that. This is the total. When you add all these three, you get that. So you can see our expenses. We are listing all our expenses in this middle or central column. Okay, so with that, I think we should be done, because I have not seen, we're only remaining with the investment. This is investment, this is final dividend. And then the provision for corporation tax should come under appropriation account. So let's add this and see what our net profit will be. 22,300 plus 34,440 plus 600 plus 160 plus 240 plus 12,290 plus 1428. That gives us 71,458. So 71,458. Notice where I'm writing the total here, the total here. So 71,458, and because these are expenses, we are deducting from our gross income. So minus 140, 520. What do we have? 69,062. 69,062. And this becomes our net profit. Now it is this net profit that we are going to subject now to the appropriation account, where we will now deal with all those figures that we were saying don't appear in the P&L account. So appropriation account, here we come, and we are going to start with the additionals. And the first addition that we are going to have here is this retained earnings. Remember, this was retained earnings for the previous year, so we are going to add its our money, my business money. So 14,160, so we are going to add. So add retained earnings for the previous year, retained earnings for the previous year, 14,160. It depends. If we have any other thing that we are going to add, then in that case we might work with the central column. But if we don't have anything else, we just put it in the outer column. I think the figure was 14,160. So I'm assuming that we don't have any other, but let's just check and confirm. And I don't think if there's any other. Yeah, there should be no any other. So we just add. So this will give us 83. My calculation will be right, 83,222. Then now we start. How will this money be utilized? Provision for corporation tax. Provision for corporation tax. I think I saw 18,500. So put 18,500. But you need to be sure of those figures. I'm just trying to take some shortcuts here which are not good. So 18,500. Sorry for that. So check 18,500, 18,500. I think we had it here. Yeah, corporation tax provision 18,500. But we need to be orderly. So we'll go to interim dividend paid. We have interim dividend. Both interim and proposed actually should come here. So interim dividend paid for ordinary 2,000, for preference for 80. So we'll come here and say interim. Remember now this is this money being used, the profit, the net profit, interim dividend paid. So we have preference and ordinary. So preference was 480, ordinary was 2,000, totals 2480. We are now utilizing this money. And then let's check if there's any other thing. Interim, these are dividends that were paid in between as the year was progressing. Do you have any other thing? Now on the additional information. No. The directors propose to pay a final ordinary dividend of 10%. So we also have the final dividend. 8% redeemable preference. Remember, redeemable preference shares attract 8%. So 8% of 12,000. Are you seeing what I'm seeing? 8% of 12,000 is 960. And we had already paid an interim of 480, so it means we will remain with 480. So we are going to come here and say the final dividend. Final dividend. We have preference, we have to pay the 480 that was remaining, and then ordinary will pay. Now this, because ordinary is normally decided, that one is variable, but preference is always fixed. That's why we work with the figure. But ordinary, you see, at the end of the year, it was passed, a resolution was passed that they be paid at a rate of 10%. So we'll simply go back and say 10% of what? 10% of 20,000, which is 2,000. So 10% of 20,000 is 2,000. So it's almost the same figure again. So 2,000, which will give us again 24. So we are not on the, we've not taken any wrong turn here. I think everything so far so good. So 18,500 plus 2480 plus 2480. That gives us 23,460. So come here and say 23,460 being the total less, and then we get the final figure. So minus 83,222, that gives us 59,760. 59,760. This is the retained earnings for 2020. The other was retained earnings for 2019. So there we go. We are done. This is the first part. That should give you 10 marks. So let's go to the second part. And the second part, they're asking for statement of financial position. So we'll just carry this heading again and start all over again. B here. So this is Almond Limited. Almond Limited. And then we say statement of financial position. Statement of financial position. But this time we talk of as at 30th September 2020. Like that. Then just like the other one, we'll also have three columns, and we are going to restrict the zeros. We're going to restrict the zeros to avoid confusion, and then we start this side, we'll have the particulars. So if this is a statement of financial position. We always start with the non-current assets. So non-current assets. Non-current assets. And of course, under the non-current assets, now we have the book value. We have the accumulated depreciation, and then we have the net book value. That is very important to capture like that. So we go straight to our assets, and we have them here. So we have building, plant and machinery, furniture and fittings, and I think we also have investment. Yeah, investment, we have investment. So these are the four. All these are non-current assets. So we are going to capture them as they are: 56 to 50, 55,000, 35,000, and 34,500. No, for investments, it's not at 4,500. There was something. Yeah, for investments, we have short-term investment, 22,500, long-term investment, 12,000. We are interested in the long-term investment because we are dealing with non-current assets. So we'll only pick the long-term investments of 12,000. Okay. So let's write them down. So buildings, plant and machinery, furniture and investment. Building. So we have buildings, plant and machinery, furniture and fittings, and investments. At least I know investments, it's the book value is 12,000. So let's go back and pick these others. I'm just getting them from investment is here, long-term investment. You can see 12,000. So this is what I've picked. I've not picked the short-term investment. And then 56 to 50, 55, and 35. 56 to 50, 55,000, and 35,000. We pick them at cost. At cost. So 56 to 50, the original amount that was spent to acquire them. And then after that, we now have the accumulated depreciation. Accumulated depreciation was given in the question. If you check, the accumulated depreciation is here as at 1st October 2019. But we are preparing the books as of 30th September 2020. So we'll take this plus the depreciations for those current years. Like buildings, it had accumulated by 18,000. Now we add for that particular year, which we did in our workings. It's here, 2250 plus 2250. So that will give us 20,250. 20,250. Accumulated depreciation plus depreciation for that particular year. Put them in brackets so that we find the correct value of the assets as at now, which is 36,000. That is okay. So we go to plant and machinery. What was the accumulated value? Before we even go there, plant and machinery depreciation for this year is 7.5, you can see. And then we go to plant and machinery, the accumulated depreciation. How much was the accumulated depreciation? 12,800. So we'll talk of 12,800 plus the 7,500 for this year. That gives us 20,300. Come here, write 20,300. So 20,300 minus 55,000, that gives you that 4,700. 34,700. Then we go to furniture and fittings. Furniture and fittings. This year, furniture and fittings depreciated by 2540. And then over the years, furniture and fittings had depreciated by 96. So we'll talk of 96 plus 2540. That gives you 12,140. So we'll come here and say the accumulated depreciation is 12,140. 12,140. Then minus 35,000, which gives us 22,860. 22,860, like that. Then for the investment, there was no depreciation. I have not worked on any depreciation for investment, so we keep it as it is. So this is 36,000 plus 34,700 plus 22,860 plus 12,000. That gives you 105,560. 105,560. Good. So then we go to the current assets. Current assets. Sorry, we didn't indicate here. Oh, we indicated non-current assets. So now we go to current assets. Current assets, the ones that can easily be liquidated, and they're not there for a very long period of time in the business. So current assets, we have, looking for them. We start with the accounts receivable. Under investments, I think investment you have that, we'll come back to it. So accounts receivable, that 5,700, but there was something about accounts receivable. So we'll say accounts receivable. Accounts receivable. How much? That is that 5,700. But we had the provision for bad debts. Provision for bad debts. I think it was here. Yeah, 1428. So we'll say that 5,000. That figure was accounts receivable. That 5,700. So it will be that 5,700. That 5,700 minus 1428. This 1428 is the provision for bad and doubtful debt. So that 5,700 minus 1428, that gives you 34,272. 34,272. Okay, then we move to the next item. Here we have things like bank, inventory. In fact, let's go for inventory. These are just things that are now obvious. You can. Inventory, if I'm not wrong, we had gotten 15,160. Yeah. Closing, this is closing inventory. These are things that are there. This is stock. You don't need to reason so much. Just look for them and put them there. We have things like banks, we have prepayments. In fact, we had prepayment here. But now here for bank, we have bank overdraft, so definitely it's not an asset. Accounts payable, deferred tax, expense account. Do you have any other asset? Okay, there are some prepayments here. The company received payment in advance for goods worth 300 to be delivered. So this is a payment in advance. So we'll just talk of advance payments. We'll talk of advance payments. Payment in advance for goods worth 300 to be delivered in October. I think this one, let's leave it. We might have captured it on number 2, but let's leave it first. We might come back to it. Looks like it's there as a trap. So, are we done with the, if we leave that one out, are we done with the investment? Yeah, there was something about investment. Good. There was something about investment. Let's go. Investment. Yes. Short-term investment is 22,500. So we go there, 22,500. Sorry for that. Short-term investment, 22,500. So short-term investment, 22,500. So let's pick those ones. I think we are done. Let's get the total. 34,272 plus 15,160 plus 22,500. That gives you 71,932. 71,932. So I'll go the net capital employed way. So I'll just get everything and then push to the outer column. So we go to current liabilities. The current liabilities, current liabilities, we have current liabilities. Where is this current? Now we start with bank overdraft 1680. Bank overdraft 1680. So bank overdraft 1680. Then we go to the next one is accounts payable 17,770. Accounts payable 17,770. So accounts payable 17,770. Then next, I'm just picking the liabilities, current liabilities. Deferred tax 52. So deferred tax, this is a current liability. We come here, we say deferred tax. It's 5,200. Then we have deferred tax, suspense account now. Okay. Yeah. Additional information, we had some stuff here. As at 30th September, no entry had been made. No entry had been made in the books for the following unpresented checks. And these were unpresented checks. And no entry had been made. So stationery, 160. These are still outstanding. So stationery, 160, because it was an unpresented check. So stationery 160, accrued expenses. Under that we have stationery, and we might want to add them because they are quite a number. 160. Then we also have the company received a demand notice for rates to 40. This to 40, so rates to 40. And I've just remembered there was something also about rates 240. There was something about the auto-zit, the debentures. Only 300 was paid instead of 600. So debentures, we also have 300 pending. Remember, it was 6% debentures, and how much was paid? Only 300. It's here. 6% debenture, the interest was 600, but how much was paid? Debenture interest paid, I think it was here. Interest on debenture paid 300. So it means 300 is still outstanding. So it's an accrued expense. So I don't think if we have any other. So we add all this. This is 400, 700. So 700. Oh, there could be something, especially we have the provisions. We're almost forgetting the proposed dividends. Proposed dividends and the provision. Provision for corporate tax and the proposed dividends. Yeah. So those proposed dividends, all of them will put here, both for preference and this. So provision for corporation tax, 18,500, and then the provision proposed dividends. Preference, it was what was paid. We had what was paid and we had what was preference, and what this other one is ordinary. It's 2,000. These ones are just here. We need not to go far. They are just here. Final dividend. These were proposed. It means they have not yet been paid. So 480 plus 2,000 and then provision. This is money set aside. So when it's set aside, it's not our money. It's still money that 2480. So we had gotten this one wrong. It's 2480. So that is it. I think we now have captured everything. So let's get the total. 1680 plus 17,770 plus 5,200 plus 700 plus 18,500 plus 2480. This gives us 46,330. 46,330. So just as I said, I'll bring this total here. 46,330. I have different, I might have chosen to work with working capital. Working capital is just current assets, this figure, minus this figure for 6,330, and then we'll add to the non-current assets. What we'll still get is non-current asset, and so what we'll get will be referred to as net capital employed. Net capital employed. So I've just chosen to add everything together. So net capital employed will have 105,560 plus 71,932 minus 46,330. This gives you 177,492. Doesn't look right. 105,560 plus 71,932 minus, I had not 46,330. So 131,162. 131,162. When you are using calculator, you need also to use your head, because sometimes you punch those figures and they don't pick the correct figures. So then we come here and say financed by. Financed by section. So financed by, we'll have, we'll start, what finance this? So we have the normal, we have the ordinary shares, then preference shares, and these things are captured here. So ordinary share capital, 20,000, preference share capital, 12,000, 6% debentures, 10,000, revaluation reserve, 3,400, and retained earnings. Those are the things that we're going to capture. But there was something about this ordinary share. Number one, the amount in the suspense account was discovered to be as a result of 2,000 ordinary shares issued at 13%. So that completes it. So it means how many ordinary shares do we have? This is 2 million times 13. That makes it 26 million. But since we are restricting zeros, it's 26,000. So it means ordinary shares will have 26,000 plus 20,000. So we go. So financed by, this thing is becoming longer and longer. So ordinary shares, how much is this? So it will be 46,000, like that. You can just show 20,000 plus 26,000. Like that. Then we go to preference share. Preference share. I don't think if we had any workings here, and the figure was 12,000, so just capture it as it is. Then let's go and pick other figures there. This is a 6% debentures 10,000, revaluation reserve 3,400. So 6% debentures. These are the long-term sources of finance. 10,000. Revaluation reserve 3,400. Then, of course, we have now the retained earnings, what you made over the years. Retained earnings. This one we just pick from here. This is 59,762. 59, and that is now quite tricky, because if you got that figure wrong, which I'm praying, 59,762, but I believe we must have gotten it right. If we have gotten that figure wrong, it means our balance sheet is not going to balance. And if it's not going to balance, it's not the end of the world. In accounts, we mark transactions. So long as you have captured as many transactions as possible right, you will be good to go. Lucky for us, or fortunately, it has balance. And there we go. This is also called net capital employed. So you can see net capital employed and net capital employed, all of them are the same. So that brings us to the end of this question, and this should be able to give you the 10 marks. This question should be done in at most 30 minutes, half an hour, for you to be on the safer side with the timings that have been given to you in an exam setup. So you need to continue working on yourself, especially speed and accuracy levels, so that you hit the time that has been set for you. So that is it. Welcome. Please follow us, subscribe, share, and success in your endeavors. Thank you.